Prospector News is media for educational purposes only and should not be construed as advice. We are not a certified financial analyst, licensed broker, or fund dealer, exempt market dealer, or hold a license to provide financial advice. We provide no legal opinion regarding accounting, tax, or law issues. Nothing in this podcast should be construed as investment advice or the solicitation to buy or sell stocks or commodities. All opinions expressed are those of the participants and should not be relied upon when making investment decisions. Those decisions should be made with the advice of a personal financial advisor. If you have enjoyed our podcast, please hit the like and share buttons and be sure to hit subscribe. I'm Michael Fox, and this is the Prospector News Podcast. I have special guests joining me today. I have Jeffrey Christian, the managing partner of the CPM Group, and we're going to talk all about the Platinum Group metals area. Welcome, Jeff.
Good to be back, Michael.
Always. We never really talk much about PGMs, but they're a significant market unto themselves, and it's generally controlled by the Russians and the South Africans. Give us an overview of what the PGM market's all about.
Well, yeah, there are 6 platinum group metals, and the 2 really important ones are platinum and palladium. Then there's rhodium, which is also pretty important because of its use in auto catalysts right now. And then there are some smaller markets of byproducts like iridium, ruthenium, and osmium. But those are, generally speaking, we just sort of put them to the side. The platinum, palladium, and rhodium are really the key markets. And, with platinum, these are small markets. And unlike gold, the reason I guess people don't talk about them so much is that, gold and silver are financial assets as well as commodities. And the way they trade and the size of those 2 markets are much larger than platinum and palladium. Platinum and palladium are clearly industrial metals. They're used primarily in auto catalyst refining, but there's a variety of other uses like petroleum refining and chemical process catalysts and electronics, and spark plugs and jewelry. And, but it's like a 7 million ounce market right now, the platinum market. And yeah, about 25 to 30% comes from South African mines, and another 25-30% comes from, or in platinum, it's, I guess Russia's closer to about 10% of the market. And South Africa is more important. So you have relatively tight control in terms of the supply because there aren't a lot of places where the stuff's mined. When I started in the business, there were 3 platinum mining companies in South Africa. There are probably about a dozen now. So it has diversified in terms of the number of companies involved, but most of them and most of the production comes from South Africa. And then on the demand side, about more than a third of it goes into the auto catalyst market. It's probably about 40%. Jewelry is an important market, although it's been kind of weak during the economic recession and such. And then those other uses. And there is some investment demand, but it's much smaller than it is for gold and silver. Palladium's a little bit different. There, it's like, relatively even mix between Russian production and South African production. You have the auto industry as the major use again. You have less use in jewelry. But you have a host of other industrial applications, including chemical catalysts and platinum catalysts and electronics and semiconductors that use palladium. And again, it's primarily an industrial metal. There are some investors who invest in them, but they should be investing because these are industrial metals and not because they're precious metals. There is some spillover between gold and silver on the one side and platinum and palladium on the other, but it's probably based on misperceptions of what platinum and palladium are. They never really were part of the industrial or the financial or monetary markets. They're really industrial metals.
I see. Now, if I were to have a PGM mine, am I mining for both platinum and palladium, or is there going to be one more predominant than the other coming out of my mine?
Almost universally, the platinum metals occur together in nature. Just the nature of how the metals are formed in the earliest days of the Earth's formation, and the deposits were formed later on geologically. But usually you wind up mining platinum along with its associated metals. And you'll find that different mines or different deposits will have different mixes. So the South African mines and deposits, generally speaking, are more platinum rich, whereas the Russian mines tend to be more palladium rich. And then there's a lot of stuff. And even, to be honest, if you look at the Russian mines, it's Norilsk nickel that's the largest miner there. Their major product is nickel, and palladium is a byproduct of it. So, yeah, but they tend to occur together in different ratios in different deposits.
I see. So is that why the South Africans make up a larger portion of the platinum market, and it's a little bit more balanced when it comes to the palladium? Is it that the South African mines are more platinum forward than the Russian mines? Am I reading that correctly?
Yeah, platinum group metal mining really started like in the late 19th century. And until maybe 20 years ago, the South Africans primarily produced platinum from what they call the Merensky Reef. It's a geologic formation, and it was like 61% platinum, and maybe 40% or less than 40% palladium. But as the markets have shifted and palladium has become more important, the South African producers have shifted to the upper chrome group deposit, or they call it the UG2 deposit, and the Platreef deposit. And one of the reasons they're doing that is because Platreef and UG2 ore have a higher percentage of palladium and rhodium. And so as those metals became more important, the South Africans have pivoted over to them. We were doing studies back in the late 1980s for South African producers, and we were pointing out to them that they thought of themselves as platinum mining companies, but they should think of themselves as platinum group metals companies. And we showed them how under various palladium and rhodium price scenarios, they would be earning more from palladium and rhodium than they would be from platinum. And in the late 80s and early 90s, when we had this message for South African platinum producers that were our clients, they laughed at us. But the reality is that over the last 20 years, that's exactly what's happened. And so they now find themselves mining probably more platinum than they would otherwise, because they need to get at more rhodium and palladium to keep the auto industry supplied with those metals.
I see. Now, it's my understanding that platinum and palladium are interchangeable in most of their industrial usages. Is that correct?
In many of their industrial uses, they are interchangeable. They have different physical and electrical and chemical properties. So they will sometimes be more efficient than the other metal. One, like platinum or palladium might be more efficient to use in various applications than the other metal because of the differences in the properties. But the properties are close enough that there's some interchangeability. So you can interchange platinum and palladium in the auto catalysts to clean up the emissions from gasoline powered vehicles. You can substitute some of the platinum with palladium in diesel catalysts that are on diesel vehicles, but you still need some of the platinum. You can't get rid of all of it as you can with gasoline. And then with various petroleum refining catalysts, there are some, petroleum refining is a very complex chemistry because you're taking petroleum out of the ground, and the first thing you do is you catalyze it, you hydrocrack it, and you break it down into constituent components like jet fuel, tar, gasoline, heating oil, bunker fuel, and things like that. And that hydrocracking, you can use different catalysts. You can use platinum catalysts, you can use palladium catalysts. The platinum catalysts tend to be more efficient than the palladium catalysts in some of those things. Then there's other chemical or catalytic processes that are done on each of those distillates. And then when you get to gasoline, they use platinum catalysts to reform the catalysts to boost, to reform the gasoline to boost the octane without adding either lead or MTBE, which are chemicals that they used to add to gasoline to boost the octane, but they realized that, you know, spewing out lead and MTBE through the exhaust system was actually very hazardous to the health. So they got rid of the lead and they got rid of the MTBE, and they use platinum catalysts. I'm not sure that you can use palladium catalysts in reforming, but that's the kind of esoterica that goes on in different levels, you know. So you'll find some things where they can substitute easily, and you can see some things where in a pinch they can substitute, but the efficiency of the product or the process declines sharply. And in some applications, you cannot substitute one for the other.
I see. See, that's always the thing that's puzzled me about the PGM. You see the platinum price, you see the palladium price. And today when we were checking, I was checking it, there's actually 2.25 times difference, you know, for every ounce of platinum, you would get 2.25 ounce, or palladium, you get 2.25 ounces of platinum for the same price, roughly. There has to be a price point where the demand for one shifts to the other. Is there, or am I being too simplistic in looking at it?
The answer is yes, but, you know, there are a lot of people who think it's just a function of price, but there are a lot of technical specifications throughout the different industries, like as I was referring to. So, you know, for the price point for auto catalysts, back when they used to use washes to coat the substrate with platinum group metals, was 2 to 1. So 2 parts of you could cover twice as much stuff with platinum as you could with palladium. But we've moved to other ways to apply the metal and coat the substrate in the autocatalyst. And the ratio ostensibly is 1 to 1 now. But it's not that simple, because each auto industry has different technologies. They have different engine technologies. They have different fuel injection systems. They have different exhaust systems. And so there are a lot of complications. And when you saw palladium move above platinum back in 2018, that didn't necessarily signal an immediate shift away from palladium back to platinum, because the exhaust system had to be re-engineered, the fuel injecting system had to be re-engineered. In some cases, the engines needed to be re-engineered. And in many cases, the undercarriage of the vehicle had to be re-engineered. And all of that stuff takes time. So, you know, from 2018 to 2021, you saw auto industries gearing up to make a move back to using more platinum and less palladium. And people kept saying, well, I don't understand why the auto industry is not making that move, because palladium is more expensive than platinum. Well, the reality is, first, you know, at the first level, just on the price alone, auto companies and others will not necessarily change their technologies for a short-term price move. So they were waiting to see how permanent the palladium premium to platinum would be. But in addition to that, you had a lot of this re-engineering that had to be done. That re-engineering started to appear late 2019, early 2020. And you started to see a much more significant shift back toward using more platinum and less palladium in gasoline and in diesel vehicles. But then the pandemic and the economic lockdown and the semiconductor shortage and the war, you know, all these other factors have intervened and really messed up the auto industry. So the auto industry is still making that shift, but it is being masked by lower auto production and sales due to all of those other factors.
Yeah, I was about to ask you what the semiconductor shortage and its impact on the on auto sales would have to the platinum and palladium markets.
Yeah, well, it's interesting because palladium gets the double whammy because it's used in many of these semiconductors as well as in the auto catalysts. The fact that they're not making as many semiconductors that use palladium as they used to hurts fabrication demand and is reflected in somewhat weaker prices over the last, several months. But in addition to that, the auto industry has the auto industry's problems, and the fact that they can't get semiconductors and other components to manufacture their vehicles has had a negative effect on platinum, palladium, and rhodium, which has really been reflected in the prices of these metals over the last couple of years.
So as things normalize, do you see the price spread between the platinum and the palladium shrinking?
Yeah, we do expect the palladium price will come down. We expect the platinum price on a long-term basis, not in the next year or two, but beyond 2024, we think that the platinum price will probably start rising, and the palladium price will continue to show weakness. And you have to sort of put a big proviso on that word "continue" because the price reached a record level in the first quarter of this year. So, the price is still very high, but it's showing signs of weakness that are probably going to continue. But the auto industry and the world economy and the world political system all need to sort of regularize themselves before you'll start really seeing those kinds of price trends emerge.
Yeah, the challenge I've always seen with this market, it was like pick your poison. When the output is coming from Russia and South Africa, you've got sanctions all over the Russian economy, and South Africa seems to be ripe with labor unrest constantly in the mines. What is an autos and the industry to do to get stable and reliable product?
Well, under the Soviet era, all of the information about platinum group metals production and refining and usage and inventories were state secrets. And in the post-Soviet era, most of the information is still a state secret, And in South Africa too, like when I started studying the platinum group metals markets in the 70s and early 80s, the South African producers didn't even divulge how much metal they were producing. And when we came out with our first report in 1981, there were all of these investigations at what was then Rustenburg Platinum and Impala Platinum and the Soviet government to see where we were getting our information, because it was all either state secrets in Russia, the Soviet Union, or corporate secrets in South Africa. And, that was the only indication we had that we were close to being right, because these were such secretive markets. If our guesses had been, or our estimates had been way off, they wouldn't have investigated us. They'd say these are just some guys in New York making wild guesses. But the fact that they investigated where we were getting our information indicated to us that we were probably pretty close to the mark in estimating how much these guys were producing. But it's always been a very secretive market, and it got, the auto industry was petrified by the fact that it needed platinum and palladium, and then after 1980, rhodium. And these came from the Soviet Union during the Cold War and South Africa during the apartheid era. And, when we got into 1991 and the Soviet Union dissolved, there was a flood of Russian metal sold into the market by people who had access to it. And then in 1994, you had the first multiracial elections in South Africa, and you had the political risk of exposure to Russia and South Africa disappear. And the auto industry changed its view toward the risks involved in using platinum, palladium, rhodium sharply. And they went from having these 10-year contracts with minimum and maximum production and sales and prices to pretty much having annual evergreen supply relations. Now, in the last few years, all of a sudden you're seeing increased political risk being dependent on Russia, and to some extent, some economic risk being dependent on South African producers. So you're the pendulum sort of swinging back, and the exogenous risks inherent in needing these metals for your product have become greater once more. And it's one of the things that was reflected last year when the platinum price rose before it fell back.
I see. So if you're an industry nationalist and you believe that deglobalization is happening, where are the European and the North American countries going to turn to get their platinum if they can't rely on South Africa and Russia any longer?
Yeah, my view is that deglobalization is not actually happening, that we're in a cyclical decline in globalization of the economy, and we have major political differences there. But regardless of what I think, the reality is that the political risks of being dependent on various countries for scarce materials or rare materials is increasing. So European automakers, North American automakers, Chinese automakers, Southeast Asian and Asian automakers, ex-China, all of these guys are much more concerned about their long-term exposure to metals that come from primarily two different places, South Africa and Russia.
Now, we've touched just very briefly on rhodium. I have to admit, I know very little about rhodium. So as an investor, should I be looking at that, or should I be running to the hills?
We always advise investors to not get involved with rhodium. It's a very small market. It's less than 1 million ounces a year, and it's very highly specialized. It's not a financial asset. It's an industrial commodity. It's not traded on an exchange. So there's even less transparency as to what supply, demand, and prices are than there is with platinum and palladium. It's really not a metal that's suitable for investors. We have invested in rhodium for clients over the 40 years that we've been, 4 decades that we've been in business. We've invested in rhodium as well as other very smaller specialty metal markets, but we advise most investors to just stay away from them.
Well, coming up on the 26th of July, you're going to have a complete overview of the PGM markets beyond what we've touched upon here. Tell us quickly about that seminar and how people can register.
Well, as I said, we came out with our first platinum review and outlook in 1981, and we've been Platinum Group Metals ever since then. We will be releasing our 2022 Platinum Group Metals Yearbook on July 26th, so that's next Tuesday. And we will have an online briefing. You can go to our website, cpmgroup.com, pre-order the book. It comes out as an ebook. And you can also register either at our website or at, I think it's, I'm not quite sure where you can go. But if you search for it, you should find registration for the online briefing, which is free and open to the public. And it'll last an hour or so. And we'll cover the markets in greater detail at that event. And
I'll put the link to that at the bottom of this video as well. You can also go to the Prospector News and see where it's in the upcoming events column, and you can click through there and link up and register that way as well. So just before we wrap up, I just want to say I'm looking forward to us getting together again, seeing each other. We're going to be down in Spokane at the end of August at the Silver Symposium.
Yeah, I'm looking forward to that. I'm looking forward to seeing you as always. But yeah, this is the second year for the Silver Symposium, and we're hoping to we're encouraging a lot of people to come. We're reaching out to silver mining companies and encouraging them to participate. We've reached out to some national mints and some others to see if they would want to participate. I'll be giving a speech on silver. We'll have our open forum, which will be sort of a luncheon. I think there's a box lunch, and then it's just an open question and answer period. And then on Tuesday night, we're planning to have a special event, which will be the evidence for and against silver suppression conspiracy theories. And it'll be an exploration. We'll start off with a detailed discussion about what the theories are, the evidence that has been put forth to support the theories, the evidence that has been put forth and collected by the CFTC and others that sort of refutes these conspiracy theories. We'll also talk about the origins of the conspiracy theories and the people who are behind them, because we do think that personalities matter, and you should know who it is that you're listening to in these markets. And then we'll open it up to a question and answer. We're also arranging to have a fellow who used to be the head of market surveillance for the CFTC come out and participate in that too. And he is a fellow who is responsible. The CFTC didn't have the greatest market surveillance program for most of its existence, but maybe a decade ago, Gary Gensler took over as commissioner of the CFTC, and he reached out to this fellow and said, what does it take to make you, to get you to come to the CFTC? And the fellow said, I need a budget, I need computerization, and I need the power to hire and fire people, fire the wrong people and hire the right people. And Gensler gave it to him. And if you look at the incidents of market surveillance and market complaints that the CFTC made, they skyrocketed after he arrived. He's retired now. And so we're going to bring him out to join the discussion. So it should be a really interesting event.
I can't wait. If you have any interest at all in the silver, again, you can go to the Prospector News, click on the link to the Silver Symposium, and join Jeff and I down in Spokane at the end of August. Thanks very much for joining me.